So we're talking oil and agro-commodities now with Akonobi, who is a research analyst with the economic unit at Financial Derivatives Company. Good morning to you, Ada. Thank you so much for joining me on the program this morning.
Good morning, Harriet.
So, of course, it's all about oil prices. All the, social media, news-wise, everybody's talking about oil prices not likely to recover to more than $80 a barrel by 2020. That's according to a recent report by International Energy Agency. And then OPEC is actually forecasting a more balanced market in 2016. So, one would expect that with all this, positive news comments coming out from OPEC, then maybe the markets will begin to see a little bit of bullish trading.
Why OPEC is saying that oil prices will increase in the long term is because they're particularly looking at China, and they're saying that probably the demand for oil in China will expand by as far as 2035, 2040. And we know that in China, urbanization continues, population is still growing, and there's more social mobility. And obviously, if all these things are happening, this will, the demand for oil or the demand for crude will actually increase in this region. So that's why most of these energy analysts are predicting that global demand will pick up in the very long term, particularly from Asia. And we see Russia as well is looking to double its crude export to Asia, to the Asia Pacific region, because they believe that Asia demand will increase then. But then we still have the fundamentals, which is supply glut.
Okay, so we're going to see more increase for more increased demand for OPEC crude and not non-OPEC oil crude.
Well, OPEC will still, they will continue to produce at record levels anyway. But then non-OPEC production might decline, particularly from high-cost producing areas, just like, for example, Canada, Brazil, and US. So expect that non-OPEC production will decrease going forward because they are not finding it profitable again to keep producing oil at low prices.
So what does that mean, especially for Nigeria? Recently the NNPC said they were very close to finding crude oil in the Lake Chad Basin, and so we're seeing all of this news coming out, and then we're getting more oil.
Yes, we're producing more oil, but then the cargoes are still stuck at the port because we're not finding buyers of this oil. So we know that the cargoes for October is still, cargoes for November is still in the port, and we haven't found any buyers because there's increased competition. And we know that in the Middle East they are reducing their premium to attract more buyers. So this is going to be quite difficult finding buyers for this oil. So that means there's still the supply glut anyway. And even though a non-OPEC production will decrease, the possibility of Iran and Iraq coming into the market by end of December is also adding pressure to prices because that will offset the possible decrease in non-OPEC supply.
So talk to us about what's happening in the global agri prices. We're seeing that wheat futures have continued to weaken. Wheat is now down about 4.10% at with the current price at $5.01 a bushel.
Okay, so most grain commodities, wheat and corn, are declining. Firstly, because we know that the US dollar is strengthened 1.3% against basket of other currencies. So if there's a stronger dollar, it will discourage most buyers from buying this because since it's priced in the dollar, and this happened because of the impressive US job data that came out. So that strengthened the dollar. And again, we know that most of these grain producers have large stockpiles and inventory. So there's a lot of stockpile, there are a lot of inventories, and most of these importers are not looking to buy US corn. And we know that US grains, and we know that US is one of the largest growers of this grain. So that is why most grain prices are down at the moment.
And so do you expect to, like cocoa futures, for instance, do you expect it to remain low in the coming days?
Well, the news for cocoa now, cocoa prices are actually going down because of a positive output from Ivory Coast and Ghana. So we know that Ivory Coast is going to give in about 60,000 metric tons of cocoa compared to previous forecast. So this is good. And Ghana as well has sold forward about 192,000 metric tons of cocoa, which is 118% higher than previous forecast. So we are seeing favorable weather conditions in that region, and output isn't actually as low as most people anticipated. So this is pushing most cocoa prices down. And again, the dollar, the strengthened dollar as well, it discourages people from buying because of how strong the dollar is.
Okay, so let's come back home. Looking at some of domestic commodities, palm oil, for instance, palm oil prices are increasing, and from your analysis, is owing to sales of stockpiles.
The market chatter about palm oil prices is they're currently selling the stockpiles right now. I know that palm oil season is April, May. So, I mean, the season is past. So what they're selling mostly now is what they actually had in the past, which is the stockpile. So pending harvest season next year, we'll probably see palm oil prices increasing. And again, festive season is coming.
Oh, yes.
So generally, most domestic commodity prices are increasing. Rice is increasing on a weekly basis. And we know that even the domestic rice, even the locally produced rice are actually increasing as well, because those farmers are taking advantage of high prices of foreign rice. So rice prices range from 9,500 naira to even as high as 10,600 naira. And most people anticipate that going forward, December, prices might actually go much higher because there's scarcity of rice.
And then we have, still talking about the price of palm oil now, 25 liters in Lagos goes for 6,800 naira. In Kano is at 6,000 naira, and in Onitsha it's 6,500 naira. Do we have more people consuming palm oil in Lagos than we have in Kano, for instance, and Onitsha? So why are the prices different?
Basically because of transportation cost. So we have to factor in the transportation cost in these regions. And we know that particularly the north, the roads are not the best. The roads are quite bad. So transporting most of these commodities might be really difficult, and I mean that is why prices go up anyway. So mostly the infrastructural problems we're having is affecting prices.
Okay, so talk to us, based on this numbers, the prices of food and the rest of it. These are the major components of what the headline inflation usually is, and we're expecting the National Bureau of Statistics to release a headline inflation for October this week. What are your thoughts? Do you think the numbers will trend upwards or it will be muted?
We at FDC believe that inflation figures will actually inch up by 0.1% to about 9.5% year on year. And this is mainly due to the imported inflation. We still have the forest restriction. You have most of these stores low inventory levels because they can't actually import. They're finding it very difficult importing most of these stocks. We have the high waivers and tariffs on rice, and as well as the flooding that happened in the north region. So all these are affecting. And we know that power supply as well was quite low compared to the month before. So all these are factoring, all these are making us project that inflation figures in October will inch up 0.1%.
But in the eventuality that we see something different, maybe for instance, I don't know, something drastically changes between now and when those figures come out, do you think that maybe going forward we should continue to expect an uptrend? Because that's how it started. Gradually we started from 8.9 and then we crossed to 9%, and then we're slowly inching to that 10% mark where the Central Bank of Nigeria is hoping that doesn't get to. So do you think that this is the start of that, inching upward for the inflation figures?
I mean, if you compare inflation figures last year, it was about 8.1%. So there's a significant increase in inflation year on year. Going forward, we believe that inflation figures will continue to increase. Seeing that we still have the forest restriction in place anyway, and seeing that the festive season is coming, so we have more people buying stocks now, and generally at December period prices will go high. And if you know, rice is one of the major commodities during festive season. People buy for the occasions, people buy for even gifts, so if most market people believe that there's a scarcity of rice and local production isn't enough to feed the Nigerian population, we can only believe that going forward price of rice might actually skyrocket. So inflation figures will continue to go up. Definitely not coming down. It might remain flat, but inflation figures will continue to go up.
Akonobi, thank you so much for joining me on the program this morning.
Thank you so much for having me.
Akonobi is a research analyst with the economic unit at Financial Derivatives Company that puts together data that we focus on the commodities market segment every Tuesdays and Thursdays. But Business Morning continues in just a moment. Join us again.